Good news out of China just hit the tape. And if you are a stacker, a real stacker, someone who held physical silver through the crashes, through the margin hikes, through every headline declaring the silver bull market dead, the next 6 minutes might be the most important you watch this year. Because the news coming out of China is not just economic policy, it is the exact catalyst structural silver analysts have been watching for years, the trigger that could ignite the largest move in silver prices this decade. Premier Li announced that Chinese policymakers will deploy rate cuts, reserve requirement reductions, and targeted structural support tools to stabilize and stimulate the economy. March 6th, 2026. Rate cuts, reserve requirement reductions, structural credit tools. 3 major monetary levers pulled simultaneously by the single largest industrial consumer of silver on Earth. Announced days ago, and almost completely ignored by Western precious metals coverage, but that was only half the signal. On the exact same day as the policy announcement, customs officers at Hong Kong International Airport uncovered gold and silver plates hidden inside the bases of cheap consumer electronics. The metals were glued into the casings, disguised as ordinary imports. The seizure immediately became the largest precious metals smuggling bust in Hong Kong history. March 6th, 2026. China announces stimulus, and the largest silver smuggling seizure on record happens the same day. That coincidence matters, because people do not risk prison to smuggle metals unless the price distortion is extreme. What this tells you is that the premium for physical metal inside China has become so large that criminals are willing to hide silver inside electronics just to arbitrage the difference. That is not a normal market signal. That is a stress signal from the largest physical silver market in the world. This is John OG. One handle, 2 platforms. John OG, the fingerprint they cannot replicate. This channel has never sold you anything and never will. If you are new here, subscribe now. Because when China announces stimulus at the exact moment record smuggling confirms physical demand stress, the silver market just received the 2 variable signal stackers have been waiting for. Drop OG in the comments if you are paying attention. Now look at what happens historically when China stimulates its economy. Gold and silver prices tend to move higher almost immediately. Commodity strategist Bart Mellick previously noted that precious metals often rally on Chinese stimulus even when the US dollar and bond yields are rising, because industrial demand expectations suddenly shift upward, and silver reacts faster than most assets. China consumes roughly 60-70% of the world's refined silver through its industrial supply chains: solar manufacturing, electronics, semiconductors, batteries, and electric vehicles. When stimulus arrives, thousands of factory managers suddenly gain access to cheaper credit. And when credit becomes cheaper, they buy inventory, silver inventory. Not gradually, instantly. The signal travels through procurement decisions across thousands of factories at once. Now combine that with the second structural development unfolding in 2026. China has restricted silver exports to a limited group of licensed entities. Only a few dozen companies are now authorized to move refined silver outside the country. Small and mid-sized firms have effectively been excluded from the export pipeline. This mirrors the same strategy China used years ago with rare earth elements, prioritized domestic industry while restricting foreign access, which means the country consuming the most silver in the world just made 2 moves simultaneously. It made it cheaper for its domestic factories to buy silver, and harder for the rest of the world to obtain it. That combination fractures the global supply chain. Silver inside China becomes strategic inventory. Silver outside China becomes increasingly scarce. The implications are already being noticed in the industrial world. When China's export restrictions were discussed publicly, Tesla CEO Elon Musk responded bluntly that the development was not good because electric vehicles require silver, solar panels require silver, advanced electronics require silver. There are very few short-term substitutes. Every EV battery pack, every solar module, every semiconductor fabrication line uses it, and China processes the majority of it. Now layer monetary stimulus on top of export restrictions, and you begin to see the structure forming underneath this market. Economists still expect China's economy to grow roughly 4.5 to 4.9% in 2026. If that growth accelerates under stimulus, industrial demand for silver accelerates with it. And this is happening while global silver inventories are already strained. COMEX vault supplies are dramatically lower than their historical peak. Solar manufacturing alone now consumes enormous quantities of silver each year. Meanwhile, physical demand premiums in Asia continue to exceed Western paper prices. And silver had already delivered massive gains even before this latest development. Precious metals have outperformed most major asset classes since the end of 2024. Silver prices surged dramatically during that period, long before the March stimulus announcement. Now analysts who study long-term momentum structures believe silver may be entering a completely new price regime. Some forecasts are now discussing triple-digit price structures if the structural deficit continues. One precedent analysts often reference is China's copper accumulation during the mid-2000s. When China began aggressively securing copper supplies, global prices tripled in roughly a year. And the silver market today is arguably tighter than copper was then. Silver supply deficits have persisted for years. Export controls are restricting movement, industrial demand continues expanding, and physical inventories are shrinking. But there's also an honest counterargument. China's consumer economy has been weak in recent years, and some economists believe stimulus could underperform expectations. If domestic consumption fails to recover, industrial demand may not accelerate as quickly as markets expect. Geopolitical risks also remain. Sanctions targeting Chinese trade relationships could disrupt economic activity and offset some of the stimulus impact. So the future path is not guaranteed. But there are several facts that remain unchanged regardless of stimulus success or geopolitical tension. Silver today is no longer just an industrial commodity. It has evolved into what many analysts describe as a triple identity asset. Industrial, monetary, strategic. Industrial because modern technology depends on it. Monetary because precious metals are re-entering central bank reserve strategies in a world increasingly questioning fiat currencies. And strategic because both Western governments and China now classify silver as a critical material necessary for energy infrastructure and advanced technology. That transformation matters because strategic assets behave differently from ordinary commodities. They become objects of national competition. And when strategic materials experience supply constraints, price discovery becomes explosive. Which brings us back to the stacker. The individual holding physical silver bars purchased at $20, at $30, at $50, at $80. That stacker holds the only form of silver that cannot be margin called, cannot be cash settled, cannot be diluted by derivatives, paper traders own contracts, John O.G.